What is up, mentors? Collective, good afternoon. If you've been following me for a while, you may have actually listened to my other podcast that I started for about 3 days. It was called The Retail Investor, where I talked about my day-to-day stock trading and investing tips. And a lot of people were requesting episodes like that to come back and to keep doing those things. Unfortunately, schedule's gotten swamped, but I've been staying up to date on my stock trading. And this episode, we're going to be talking specifically about investing in stocks and how you can use it. The tips that you learn here to supplement your life, create new streams of income, and ultimately build your wealth over time. And to do this, I've got a friend who's going to help me. We're going to dive into specific stock picks, where we think the world is going. And if you listen to this episode, I guarantee it will be a supplement to building your wealth. You're going to get a lot out of it, and this is going to be a really fun conversation. So with that, I want to welcome Teri Ijeoma, and she empowers thousands of people from around the world, teaching them how to supplement their income through trading so they can design and enjoy their ultimate freedom lifestyle. Since her launch, Teri's been recognized as the grand champion of Teachable's 2019 Creator Challenge and has been featured in Forbes, Black Enterprise, Yahoo Finance, ABC, NBC, Fox. She's got a massive presence on social media. Definitely check her out on Instagram or on her website. So with that being said, Teri, I want to thank you for joining me, spending a few minutes with me and my audience, and talking about a subject that I'm super passionate about. Welcome.
Thanks so much for having me, Jay. I'm so excited to be here. Thank you.
Same here. Not every episode that I do, not every guest that I host on here, I'm super excited to talk about. Not every subject is as entertaining. But again, like I told you pre-episode, most of the content that I consume is market news. It's stock picks. And doing that I think I'm up 70% over 2 years. And woohoo is right. And that's my goal for everybody listening. If your money's just sitting there in a savings or a checkings account, you are doing yourself a massive disservice. So hopefully we can give some people some guidance, help people build some wealth, and really give back. So I'm excited to dig into it with you.
Total disservice if they're just letting it sit in a savings account, making like 0.00 nothing percent. I cannot wait to talk about this.
Same here.
One of the things I tell my students, and I have a course, Trade and Travel. That's the one that's the number one on Teachable. And our goal is to make 1% of our cash amount on a regular basis. So if they're doing that on a daily basis, that's like 5% a week, 20% a month. But I think it sounds small when people first hear it. They're like, 1%, that's it? But that actually really grows over time. In 5 months, you can double your money. That's 100% return. So those small bite-sized goals actually add up, and you can do that with trading much better than you can do just having your money sit in a savings account.
Absolutely. And I've done the savings account route. I got a really good rate offer, and then all of a sudden interest rates plummeted. My savings account became worthless, and that's kind of what initiated my drive into trading. So before we kind of dig into the meat, I would love to hear a little bit about your trading style, because I think that's going to help me guide the questions and the topic. Do you swing trade? Do you day trade? Do you long-term hold? What is your style? What do you teach?
Great. So I am a swing trader. I'm a day trader and swing trader. I'm a technical analysis trader. So I'm looking at charts, and then depending on what the chart says, that'll tell me how long I keep the stock. And I'm a stocks and options trader. So if the chart says, hey, you've reached your target in a day, then I'll sell in a day. If it's not to the target yet and it takes a few days to a week, then I'll let that sit for a little bit longer. But my ultimate style is I'm a technical analysis trader, very big on risk management as well, looking at my reward to risk ratio and putting in stop losses and things like that. And then I'm a trader that trades for a goal. So the idea of Trade and Travel, where it came from, was I just wanted to travel around the world, and I just needed to afford my hotel rooms, my flights, and I did that with trading. And so that's kind of what I teach people now. If you're trying to get your kid in daycare and you need $1,000 a month just to get them in private school, how do you trade to afford that? Or I have some students that were renovating their kitchen. They traded to renovate the kitchen. So there's so many things that you can do in life. Even quit your job like I did. I was assistant principal of an elementary school before I started trading full time. Like, you can do that with trading stocks. So that's what I teach.
Love that. And swing trading is probably my favorite style. I actually had a trader on here about a year ago. It's one of my most popular episodes to date. Driving around his Lamborghini, everybody asking questions, wanting to get into this. And I know a big misconception around day trading, swing trading, is that you can make these heaps of money. Basically sitting at your computer, you've got the 9 screens and you're pushing buttons and it's spitting out millions of dollars on the other end. Is that, dispel that for me. What is it really like as a full-time trader?
As a full-time trader, and I will say, yes, I have made $1 million in a day. So
Wow.
that is possible. However, I did not start there. I started on assistant principal salary and savings. So it was really just, can I make $300 a day? And that would replace my income as assistant principal. And what my day really looks like is, on Sundays of the week, I'm looking at all my charts in my watch list and looking at where I want to get in and out of a trade and putting in some alerts into the computer. That way, during the week, I don't have to spend as much time actually watching like the screen and the TV all day, because I know that when it gets to where I want to buy or sell, I'll see an alert. So then during the day, I actually start the day about an hour before the market opens, looking at what's happening that day, looking at CNBC, looking back at my watch list, kind of going over the charts. I usually trade for about 2 hours in the morning. I also look at like gaps and Globex trading, and I short sell and I sell long. So both of those things I'm doing that first couple hours. But by 11 o'clock, I'm out of the market. Then usually I live in Puerto Rico now. So like walking on the beach or having lunch with friends or even like working with students. So that's what my day looks like. At lunchtime, I kind of check my cell phone. You don't have to have 9 screens. You can do this on your cell phone. And at the end of the day, the last hour, that's another good time to trade. So that's when I'll make decisions like, am I going to stay in the things or sell them that I'm already in? Or will I get into something new for the next day? And at night, usually when I'm in the bed, I'll just go over that watch list one more time, make sure that I'm ready for the next day. But that's really what it looks like. No more than 4 hours a day, usually less than 2 as an actual trader.
And that's kind of a big distinguisher, right, between swing trading and day trading, whereas day traders a lot of times are sitting there making, buy and sell decisions by the minute, whereas swing traders, it's a little bit wider gaps, right? You're buying something in the morning, maybe exiting the next day or exiting later that day. So it doesn't require as close of a watch, which I think is really attractive for this model.
Yes, especially for anybody that has a job. A lot of times people will come to me and they say, I want to make money in the market, but I'm afraid to have a job. I don't have time. But if you're able to actually let it sit and put those orders in, they're called limit orders,
Yep.
Then they'll hit on their own and you don't have to watch it all day. Yeah,
absolutely. And I know there's a lot of, especially as a professional trader, like you do this full time now, there's a lot of fail safes, if you will, rules that you set so that you don't, lose your hat on a trade, or so that you can put things on autopilot so you don't have to sit there and watch, limit buys, limit sells, things of that nature. And for those listening that aren't familiar with those terms, what are some of those tools that you use in your day-to-day trading life?
Great question. I love risk management. It's like my favorite thing ever, because when I first started trading full time, I lost like $26,000 in a day and thought I was going to die. Yeah. I was like, oh no, I'm going to have to get a job again. No.
That's so important for people to hear that, you don't start off as a professional trader. Like a lot of traders I know go through a lot of these learning experiences, right? You learn lessons the hard way before you eventually build up the skills and the tools like these limit buys, limit sells, so you don't lose your hat again. Right?
Exactly. And you know what? I'm actually going to walk you guys through some of the things I learned in that loss, because I think it'd be helpful.
Hell yeah.
So it was Pandora. I remember it like yesterday because I was in Thailand when it happened. And I know we don't have all the time in the world. Jay's like, come on, Teri, we ain't got all this time.
No, the stories are the
what
best.
Happened, y'all.
Please.
So it was actually the Lantern Day in Thailand. It's a day where you go at nighttime, the whole city comes out, we all put lanterns up and we're wishing upon a star. It was the best day ever. And then I remember at nighttime is when the US market opens in Thailand. So I find a quiet corner, I open my phone, and it was Pandora's earnings. This is Pandora, the radio company Pandora. And it fell $3. But y'all, these are some of the problems. I had 8,000 shares. So overnight, I had literally lost $24,000 overnight, and there was nothing that I could do about it. First problem, quantity size. And I have some formulas around how do you calculate the right number of shares to buy at a time. Second problem, I had got in at the highs like nothing, like, when you get overconfident and you think that, oh, nothing's going to happen, like it's going to keep going up. No, it wasn't. And even, even the fact that I was trading earnings, that is a gamble. Even if earnings are great, you never know what will happen to the actual stock price. It could be like they beat on all cylinders and then the stock plummets. So that's just not a good time to trade. Another thing was I didn't have a stop loss in. That's one of the order types we were talking about. A stop loss is an order where if the stock comes down and it hits this stop loss, it'll take you out of the trade. I think of it like if you're zip lining down through the forest and then you hit that buoy and it stops your momentum. That's kind of the same thing with a stop loss. If the stock is falling and it hits that, it'll get you out of the trade. Another thing I use is a bracket order. So anytime I take a trade, we're doing 3-to-1 reward to risk ratio. So our target has to be 3 times higher than our risk. The way that we do that is by putting in that stop loss, you already know what your risk is. Now your reward should be 3 times that. If you have a target up there at the whatever that stock price is, that's 3 times, you would use a limit order. That's the stock price there. But you can actually set those brackets in the system and they just sit in there. Another thing out there is GTC. Make sure your time frame is good till canceled. But you can let it sit in there and then you can go to work, you can be watching TV, and all of a sudden you get a notice, hey, I made some money today. Or even if you get a notice, oh, I lost some, at least you know that it's not going to be bigger than you expected. It's going to be where your stop was. So those are some of the things that I use now because of the problems I had with that one trade.
Yeah, you hear that, everybody? Learn from her mistakes, learn from the mistakes of people who have done it before, and take them seriously. Now, one other thing I wanted to kind of dive into was swing trading requires you, just kind of by nature, like you were talking about 3x gains, to invest in stocks and pick stocks that are a little bit more volatile, maybe, have a lot of room for massive growth, but also are risky enough where you could lose your hat on them. So how do you pick these stocks?
Yeah, so I actually I trade about 30 companies that have been on my watch list for a long time. I've been trading now 11 years. So I've seen it all since 2010 to now. But when I'm picking companies, I actually pick companies that fundamental investors would also choose. So I'm looking at companies that are on an uptrend consistently over the last year, that have an average true range of at least $1 a day. So that may be one thing that's a little different from me versus a fundamental investor. An average true range is how much they move a day. A fundamental person may say, oh, this one's good. It moves about 10 cents. I'm like, no, I need to move at least $1 to make some money. I'm also looking at things that have a good trajectory in terms of like their forecast is positive in the future. So the things that I'm trading are actually really solid, healthy companies, and I'm just trading in and out of them for income.
Can you give a few examples of the companies that you've been watching and trading all of these years that you believe are going to be good stocks going forward?
Sure. So, like, I've been watching Amazon since it was $199.
I hope you got in at $199.
You know what? I've been trading in and out of it for years since then. But I had a great day trading it. Just it was my $1 million day. So it was on Amazon options. Yep. And then last week I had a great day trading Adobe. And even this week, I like Adobe. I like Salesforce. It's another way to play technology, but those things, even in COVID, you needed software. You needed to be able to use your computer. I am also in like AMD. I like semiconductor chips. And I know we were talking about how just certain trends going on right now. The supply chain is really down right now. Like there's a struggle to get things. Tesla had a great earnings report recently, but they're also back order on their cars because of semiconductors. So I decided to invest in the semiconductor space. Another one that I've been watching a lot lately is Visa, because Visa stock always goes up, but lately it's been in a slump and has not been moving. But those are the times where it's a great opportunity to buy. So that's another one I've been checking out lately.
I'm glad you mentioned those names. Those are a lot of the names that I've been in for a long time and have been pretty great performers for me. Tesla specifically, man, 20% of my holdings are in there. So I don't know how you feel about that, but has treated me very well over the last couple of years. I think my cost base is like $550. So very,
That's
very good.
awesome.
Yeah.
I was going to say, like, don't forget to take some profits. Like, don't be greedy out here.
So
At least take a little bit of profit.
exactly. So here's my style, and I would love to hear your thoughts on this because I don't swing my entire position in and out of stocks, but I do like to trim when things go way up, right? Like FCell yesterday did like 20% gains. I trimmed half my FCell position today, down 5%. And it's like
Nice.
clockwork. You know, when you see something like this shoot up, I like to take my earnings, wait for it to dip back down, buy back in. I almost never exit a position completely because most of the time I'm invested in companies that I believe in long term. I think FCell, I think Plug are going to be doing just fine 5-10 years from now. But those big swing days are great opportunities to take a little off the top, reinvest into things that maybe aren't doing so well, like Visa, or hold some cash for what the market's been doing, especially in my portfolio over the last year, which is way up, way down, way up, way down, which for someone like you, I'm sure has been amazing. Right?
Yes. Yeah, it's been great.
Yeah, it's really crazy looking at the trend over the past year. It's almost like it's a pattern that you can almost kind of predict and follow. And if you know what you're doing, make a ton of money because it's been shooting up, shooting down every few months. There's good news, there's bad news. There's good news, there's bad news. And
This is... Yeah. Oh, I'm sorry. Go ahead.
No, I was
going to say.
Sorry, I was going to say, especially in the stocks that we're talking about, right? Semiconductors, Tesla, the ones that are a little bit more volatile, tech, all of those places are very up and down. So as a swing trader, I'm sure you've done very well. So kudos.
Thank you. I like what you said, though, about how you don't trim your whole position, but you just take some off, but leave a little bit. I like that. And especially as an options trader, what I usually do is I'll have several different strike prices. And so like several different orders going on in one stock. So that means that I can sell out of one position, but still be in it in case it continues to run. So I like that idea. And I do something very similar. And then another thing you said about the up and down, how it seems kind of like clockwork. I think that's why it's important for people to learn some things of technical analysis, because looking at charts helps that too. You can see like, okay, I like Apple, but is this the right time to buy? Looking at a chart can kind of help you say, okay, this seems like a good price. I'm not paying too much or overpaying. Or, oh wait, now's the time where it's kind of high. It looks like it's getting closer to all-time highs. Things like that you can see on a stock chart. So I think that's good to help with that too.
Yeah, 100%. And being able to not only look at the fundamentals, but look at where a stock is in terms of where it's been, because especially these stocks, the growth stocks, things like AMD, Tesla have been like this. So if you're buying when it's like this, chances are it's going to come down. Just following that pattern over the past year. So really important things. I know a lot of people who lost a lot of money in 2020 when everything was shooting up. Everyone's like, oh, we're going to make a killing. Stocks are going up. We got to get our money into stocks. And then the tech crash. And then people emotionally pulled out, lost a ton of money, and now it's back up. So the emotional aspect is such a huge component too, right? And especially as a swing trader, as a day trader, that's something that you have to deal with and probably teach and battle every single day. So talk to me a little bit about kind of the emotional aspect of this.
I definitely agree. Like when you lose money on a trade, it can feel like someone just like punched you in the stomach. And you're just like, and then you go through all these things in your head. You're like, oh man, I knew better than that. I wish I would have done that. I could have done this. But what helps with that and what I teach my students is you've got to have a trading plan. And I have like 7 steps I take every time I take a trade. When I know that I've done those 7 steps, and it includes risk management, and it includes looking at a chart, it includes putting in my exits and determining my targets ahead of time, looking at my reward to risk, all that's in that 7 steps. When I've done those things, even if the stock goes wrong or the trade goes wrong, I at least have comfort that I stuck to my plan. And it helps me not be so emotional. And it also helps have more consistency, because what'll happen is there'll be a day where everything is going up and you're going to feel like, oh my God, I missed it. I can't believe that I wasn't invested today. And then the next day you're going to plan even before the market opens. It hasn't even, you don't even know what's going to happen that day, but you already have in your head, I'm getting in that stock because yesterday it ran up. And then that's the day where it falls, but you had FOMO, fear of missing out, and then it dropped. So having a steady trading plan will help you overcome some of those random emotions and keep you from some bad trades.
Yeah, and being very emotionally disciplined enough to stick to that plan, right? Because you're going to have all these instincts and thoughts popping in your head. You know, it's going up. It's going to keep going up. I should buy right now. Or, you know, it's going down. It's going to keep going down. I should just sell and cut my losses. Those are human thoughts that we have every day as we see our life savings going up and down. So it is important, like you said, to have that plan and stick to that plan, be unemotional, be disciplined. And if you're not a person that has that emotional control, you know, trading might not be for you. I know some people who tried it, and I'm like, this is not going to be a good fit for how you are. But it's such
and that's okay too. Okay. I'm glad that they know that. Yeah.
Same here. So we talked a little bit about options, and I actually tried to learn options. I watched a ton of YouTube videos. I took a course. I tried to buy them. Options are confusing, and they're really hard to get right. And I don't even want to try and educate people on what options are. But is that something that you've had a lot of success with? Is that something that you recommend people go and learn? Is it worth the time investment and the amount of time that it takes and to learn and lose and win to actually master that? Is that something that you think, you know, I as an investor should do?
Yes. My short answer is yes, you definitely should learn how to do it, because it's literally taking, instead of trading one stock at a time, it's trading 100 shares at a time. So it's literally amplifying your ability to win or lose. It is really hard to understand and hard to learn, though. It's one of the most difficult asset classes in all of investing. I do think that, like, I've been able to break it down. My VIP students do options. I think I've been able to break it down in a way that's pretty simple for them. But it is, I'll tell you the truth, it is the hardest thing to learn. It takes time. For anybody learning to trade, I tell them it doesn't take a long time to learn, but you need to practice for about a year before you can become consistent. So just give yourself that grace. You may not be great at first. You might even need to practice in a simulator first when you're first learning options, but I do think that it's worth it in the long run.
Yeah, it's such an interesting thing. It's like it's betting on the short-term future of that stock, right? And unlike trading traditionally, where you can, you know, if you're down, you can just hold, and chances are, if it's a good company, eventually it'll shoot back up. With an option, and this has been my experience, you know, you buy this thing, you're wrong about what the stock's going to do a month from now, and now all your money's gone, as opposed to just being able to hold there and wait. But there's more on the line, right? So if you were right and you had that same amount invested, the return's a lot bigger.
In options, it's all about time value. So if you know that a stock is going to move fast, or you believe that a stock is going to move fast, then it's good to do it in options. But if you're not sure how quickly that stock price will move, then stick to it in stocks. Like that's like literally that should be your deciding factor. How quickly do you think this is actually going to move? And if you're not sure, then you're right. Stick with the stock part. But there's times where it's like, this thing is going to move. And then that's when it's really good to have it in options, because you can see that bigger increase. I will say one way that I think about options is like a contract on a house. Like when I think about a house in Texas, I live in Puerto Rico now, but I used to be a realtor in Texas a long time ago. But literally you say, okay, I want to buy this house at this stock price on this closing day, and I'm willing to pay this much, right? And that's basically what we're saying in options. We're saying, I'm willing to buy 100 shares of this stock at this price on this day in the future. And then you're hoping that the value of that contract goes up or down. So the same way that the value of that house contract can go up if there's a Walmart announced or a Whole Foods announced in the neighborhood, now all of the houses are worth more. That's the same thing with that contract. If the stock starts going up, now all those contracts are worth more. But if all of a sudden you find out that there's like a trash company coming and they're going to be right next door. And like now the whole neighborhood goes down. Your contract to buy that house now isn't really worth as much as it originally was, but you're stuck with the contract saying that I will buy it at this price. So that's kind of what happens in contracts where we say we'll buy it at this stock price, and then it goes down in value and we're stuck with the contract that's not really worth anything anymore. But that's kind of how you should think about options in a short nutshell.
It took me like 10 analogies and then a whiteboard and someone sitting there explaining it for me to actually understand what was happening in an option. And you have to, I guess, as a professional trader, you're relatively certain. You have some kind of news, you have something to go on when you're going to buy an option on a company, right? Because you're betting on the short-term swing, whether it's shorting it or buying a call option. What are those pieces of news that you're looking for? Do you need to be early enough? What are some things that you look at that give you the confidence to make that call?
I'm actually still using the same strategy that I was using with stocks. Yeah. I'm looking at formations in a stock chart. So I'm looking at what the candlesticks are saying. And then news just helps things move faster. Yeah. So it'll still be the same formation and we know the same prices, like price to get in and price to get out. But the news will help you reach that target faster or let it drop down to your entry point a little faster. So for me, especially like these last few weeks, what I was looking at is, has it come into a really strong level on this chart where it hasn't visited this place in a while? Has it, like there's a couple different things that I look at that may not make sense if I just name them now. But like when those things on the chart tell me that this is a good place, then I take the trade every time because that's what my trading plan says.
The trading plan that you've created, is that something that you give to your students? Or is everyone expected to kind of make their own trading plan just from learning experience?
I give them my 7 steps. Yep. So they get it and they can do it every time they take a trade too.
So cool. Mm-hmm. And such an advantage to start rather than having to develop it yourself and go through the trials and tributes. Very cool.
Thank you. Yeah, that's what they say. They're like, there's 2 things they love about me. They're like, Teri, we can tell that you were an educator for 10 years. Because I don't know if I said this earlier, but like my last job was assistant principal of an elementary school. I come from like education. So the course is very like curriculum, as if you like took a class in college, like a continued education. So they love that. And then the other part is, yes, all of the 11 years of like headaches and mistakes that I made, I've help them not to have those things. So that's definitely helpful.
No, that's awesome. And I subscribe to a few different stock picking services, just like to see the research they're doing. It's never like my life or death. I never invest or sell based on what they say. I just like to see the information coming in and make my own decisions. I would love to hear your thoughts on those services in general. Maybe if there's any specific ones that you follow, subscribe to. Do you offer that as a service to your clients? Like, do they know what stocks you're investing in and selling when? Talk to me a little bit about these services.
I actually do not share stock picks. The thing for me is I'd rather teach you how to trade than just tell you what to trade, because oftentimes people don't do it at the right second or the right minute. Like their timing is off. I might say something and it's great right now, but they see it after work or see it tomorrow. And then by the time they get in, the trade is over. So I'd rather them be able to look at the chart and like figure out the trade on their own than just wait for me. Also, like, I literally do travel all the time and trade. So I might be in a plane. I might be on the beach. I might like waiting for me to tell you the stock pick. I'm still trading, but I may not want to post every day. So that's my 2 cents on it.
Okay, great. No, that's interesting. I think everybody should be able to do their own research and make their own stock picks. Being responsible for someone else losing money is, I can't even imagine the horror of that feeling. Someone investing their life savings because you told them a stock is good and it flops. Not worth it. I wouldn't do it either.
Yeah, that's a lot. That's a lot of pressure.
Yeah, absolutely. I'd like to kind of go into something else, which is tools of the trade. What do you use to monitor stocks? What do you use to buy and trade stocks? What do you use as your news source? Like, what are your tools in your tool belt that make you an expert trader?
Yeah, I still look at CNBC for most of my news, although I will say from a I will say from a trader perspective, I know that a lot of the things on CNBC are a little late. So I want people to know that by the time a news story has come up on CNBC, like somebody had to get the news, then the newscasters had to read it, then had to come out to you. So do know we're always going to be a little lagging by just looking at CNBC. That's why it's important that you do know how to look at stocks for yourself so that you're not waiting for something to happen on the news channel. But usually I'm looking at CNBC. I have a watch list on CNBC as well because I like the little notifications that come up, like especially around earnings time. It'll tell you what happened when you're not looking. For my trading platform, I use TradeStation, but a lot of my students use some different ones. They like TD Ameritrade, Interactive Brokers is a big one too. I just need the platform though to have robust order types. Like there's some order types or some platforms that won't let you put in 2 exits at a time. I want you to be able to put in both your stop and your target at one time. Also, I need them to have both trailing stops and regular stops, which a trailing stop just means as the stock price is going up, it'll actually trail your stop market order so that if it comes down, you'll get out at a better price. But some of the platforms don't have that. Another thing is TradeStation has 4 times your cash amount for margin. I do use margin, not that you have to. I know it's a lot more risky, but I like the fact that it's available. That's basically for people that don't know. It's like having a line of credit on your house. If you use some of it, you have to pay interest on it. But if you don't use it, then it just sits there. I like having that in my account because 1, you can only short sell if you have that kind of account, a margin account. And then 2, you get your money back faster when you sell. You don't have to wait 3 business days. It'll come back right the next day. So having a margin account is important. And some brokers only give you 2 times margin. Like Merrill, the last time I checked, they only give 2 times. I think E-Trade gives 2 times, but TradeStation gives 4 times your margin account. So those are things to look at. And then in terms of other tools, I like the simulator in TradeStation. If you fund their account, then you get to practice with fake money. But there's also a couple other simulators that I refer my students to. TradingView.com is a nice place that you can kind of simulate trades. Also Rapunzel, it's Rapunzl. That's an app. They give you like $10,000 to practice trading on. So those are some of the things that I like and that I tell people about.
Yeah, those are great. So as a swing trader, is Robinhood not an option? Because they don't have, I guess, the versatility. You need something a little bit more robust like TradeStation.
I would say as an income trader.
Yeah.
If you're trading actively and you like want to do this on a more consistent basis, you need a more robust platform. In addition to that, you need one that will get you into a trade at the best price. And Robinhood is a broker where they might wait like 1 second before they enter your trade, which gives you just a slightly different price than someone with a faster broker like TradeStation, TD Ameritrade, Interactive Brokers. They are made for traders, so they go a little faster. I think that's one of the biggest things. And then also just having that stability or that confidence when there's big things that happen in the market. If the market crashes, you want to be able to get your money out. And too many times now, Robinhood has just frozen, and people couldn't manipulate their trades. And so that's for that reason too. I'm not a big fan.
Yeah, most professional traders that I know are also not fans of Robinhood. So it's interesting that you say that.
I will trade it though, just an FYI.
Yeah, what's your call on Robinhood?
You can trade the stock. So it just came back down to where like it opened. And so for me, that's maybe a buying opportunity. I think it is something you may have to sit on for a little while. I don't know how quickly it'll move, but I wouldn't mind trading the stock, but I don't necessarily use it to trade with.
So wrapping up here, while we're on the topic of investing, I'd be doing my audience a massive disservice if I didn't bring up crypto, right? Everyone's talking about it. I own it. It's almost a quarter of my portfolio now across a bunch of different coins. So let's talk crypto for a second. Is this something that you dabble in? Is this something that you research and trade yourself?
I dabbled in it starting November of last year, and then I sold when Bitcoin first got to 66,000. So yeah, so praise God for that.
Yep.
It was like a great return, and I did not get back in when it came down to 30,000. So I didn't get to participate in this last move up. Part of me is like, oh man, I miss it. And other parts of me are like, you know what, girl, you're good. You got it the first time.
Yeah. And that's natural, right? If you see something like that, it's at 30, you decide not to go in, and then you watch a stock go up or a Bitcoin go up. Of course, you're going to be kicking yourself in the teeth, wishing you went in. That's human nature. But yeah, it's good that you made that first swing. What do you think about crypto as an investment space for, people in your class, your course members, and people listening?
Yeah. I think it's getting a lot more stable than it once was. Before, I think it was a really risky asset class. It was very much a speculative play. But now that more people are getting into it, so for example, it's backed by more brokers, even with TradeStation. Before, you didn't have a way to get into crypto, but now you can actually trade crypto alongside your stocks. Several, I think is it PayPal that also got into Bitcoin? There's a couple others. So now that more companies are starting to back it, I think that it's becoming a more viable payment system in general. And then I also think that now we have more data with the charts. I'm still a technical analysis girl. And before, you couldn't really track what the price was doing. You didn't know the past data on Bitcoin or Ethereum's price. Those are the best of breed for me. So those are the only two I trade. But now you can actually see their charts. You can do more with them. And then I saw the ETF come out. The BITO ETF came out. I'm actually pretty excited about that because before you didn't have a way to short sell on Bitcoin, or you could, but it wasn't as open to everybody. So now I'm excited that there is the opportunity to make money if it falls. And that's good too. Definitely.
Yeah, that getting approved. I don't know if Bitcoin shot up like another 6% today. Crazy, all-time highs. And just like kind of the tech stocks we were talking about, it does this. It's been doing this. I think it is a little bit more stable now. The swings are a little bit smaller. But yeah, I think for everyone listening, definitely a time to watch Bitcoin and maybe get in on the next drop. I don't think now's a great time, though.
Yeah, at all-time highs, I would either wait for it to shoot past all-time highs, because sometimes when a company goes through its all-time highs with momentum, it'll keep rising. Yeah. But right now, you have a lot more risk than reward going into this trade, so you might want to just
excitement's at an all-time high. The ETF's been approved. It's pumping. It's pumping. This is danger zone.
Yes.
Yeah, it's interesting. And now I'm invested in all the smaller altcoins, projects that I've actually followed that have been done very, very well. So yeah, we should see. It should be an interesting time over the next decade watching this evolve. Now, final topic I want to talk about this episode for everyone that stuck with us throughout the entire thing. What stocks do you see doing really well in the future? You watch the news, you follow the market, and you're on top of this stuff. What are some big picks, maybe not to swing trade, but a buy and hold over the next 10 years?
Well, I do have to say that, because I'm not a buy and hold investor, that these are just, I think better for me would be categories that I think are really good.
Sure.
I'm trying to figure out how to play the supply chain issue. I think that right now, the fact that people are trying to go out and buy things now because they're not sure that things will be around at Christmas time, there's a play there. Yeah. And I told you guys earlier that I'm doing it through semiconductors, but start thinking about that trend, because I think that that's going to be a bigger issue probably over the next year. Not sure how long. Eventually, the supply chain will come back. But whenever there's a short supply of things, then prices start moving up. So try to look at that.
Transportation manufacturers, like boat makers, something weird like that. They're going to have to scale up something to fix this. And
definitely,
you're right. There's a lot of opportunity there, but I think getting creative is going to be the right way to do it.
For sure.
Yeah. What other industries, what other categories are you looking at?
Other categories, I still like the payment processing category.
Me too.
So I was telling you guys about Visa, but PayPal, Square, no matter what, you're going to have to buy things. And I think that those categories will keep moving up and moving higher. And they're actually included in the tech stocks. So if you do a XLK ETF for technology, you'll actually see a lot of those payment processing stocks are in there. So they're still considered tech but I still like that a lot. And I think that it'll continue to grow. And then right now, I'm still a believer in like Amazon and some of the companies that got hit in September. I think that they're going to start going back up and passing through all-time highs again. So those are some that I'm just riding the wave on.
Yep, same here. And we're in a lot of the same categories. Affirm is one that's done very well for me.
Yes, congratulations.
Thank
That's a good
you.
one.
That was one of my stock picking services. So I was very excited about that one. Square as well, I'm in. But yeah, some exciting names, and thank you for sharing a lot of that. One category that's been horrible for me almost every time has been biomedical, and horrible every single time. They're like,
well, did you do the vaccine companies?
Nope.
Or which way? Okay.
No, projects with stuff in clinical trials that might get approved. I think it's been like 0 for 3. It's just not getting approved or flopping. Yeah.
For me, like, I'm not good at speculative things in general. Like, for me, it has to be something that's kind of tried and true anyway, and then I get into it when it's coming down or at the right time.
Yeah.
So anything where it's like they might get approved, I'm not in there. I'm not in penny stocks. I'm not.
Yep.
That's just like not my thing.
Those are the risky ones with potentially like 50x returns, right? One of these like small companies gets a game changer drug approved through a clinical trial. Gets bought by Pfizer, and then all of a sudden you see a stock like 20 to 50x. Crazy. Definitely wouldn't put your life savings in any of those things, but something to be on the lookout for.
You know what? Oh, sorry.
No, you're
sorry,
good.
Jay. I know we're almost done, but I was going to say one thing people have to remember, though, is there's always an opportunity cost to having your money sit in something. So if you put a good amount of money in a speculative play and you're just waiting for it to happen, like waiting for something to happen with it, you could have had your money somewhere else and it could be making money during that same time. So you really have to weigh the pros and cons because there's an opportunity cost to every decision.
Yeah, 100%. And next time I'm using a stop loss anytime I do something biomedical. But Teri, for anyone who's listening that wants to learn more about investing, wants to consume more of your content, learn from the former vice principal, $1 million trading guru, where's the best place to follow you, get your courses, sign up? And is there anything that you can do for the listeners here?
Definitely. So best place to find me is anywhere trade and travel. So tradeandtravel.com. There's a free webinar on how to make $1,000 in a day. And on our YouTube channel, it's youtube.com/tradeandtravel, all written out. We have lots of content there. I'm on Instagram as well. You can find me at Trade and Travel on Instagram, or my name, Teri Ijeoma. A lot of people pretend to be me, though. So I would say just stick with Trade and Travel and you probably find it a lot faster. And then, yes, so the course is #1 course on Teachable. We have over 8,000 students that I've taught how to trade, and they've even started communities where they're doing meetups in different cities and practicing trading together and just doing really cool stuff. So I'm going to give Jay a link and y'all can see it in the bio, and come on in. I'll even give you a promo, Jay, and we can figure it out after the call.
Appreciate that. Whatever promo link or code that is, I'll put it in the show notes so you guys don't have to look far. Teri, thank you so much for joining me. This is a topic you can tell I'm passionate about. So thank you for coming on, educating me, educating the listeners. I hope if you were listening, you got something out of this. You're able to apply some of these skills, build your wealth, live the life of your dreams. So Teri, thank you again. It's been an awesome episode.
Thank you.